you do what you love, you'll do it all the time. So that's why your routine is very important. So I'm gonna get right into it. I sent out a cheat sheet of my 20 rules that I've put together over the course of the past about 22 plus years of trading. I'm gonna go through each one right off the cuff, and hopefully it gives you guys a little bit better sense of what I'm talking about. So the first one, have a plan. Okay, you have to have a plan every single day. I actually have multiple plans because a plan isn't worth anything unless the market confirms your thinking. So if you have plan A, plan B, plan C, and you wait for the action, you'll be thinking straight in order to execute depending which way the market goes. If this happens, then do that. If that happens, then do this. That's briefly for number one. Number two, create a daily routine you enjoy. Yes, you have to have a routine because this is something you do every single day. It's the only way you can have staying power. And you have to like your routine because if you don't do what you like to do, you're never going to do it over time. So that means, what time do you get up? What kind of iced coffee do you have? What kind of breakfast do you have? Where do you do your charting? Do you put on some music? How do you get set up for the day? Then do you take a break during lunch? I like to go to the gym at lunch since I'm up since 4:45, so then I could trade the close. So you have to have a routine that you enjoy and that you love. I think my grandparents said, if you do what you love, you'll do it all the time. So that's why your routine is very important. Number three, take a blue collar mentality. A lot of people ask me about that. You know what that means? It just means trading is not a get rich quick scheme. You're not going to get rich overnight. And if you think you are, you're going into the wrong career. Okay, it's a blue collar mentality. You do the same thing day in and day out. You get prepped, you know what you're doing, and you net money. If you net money and you take a hard work, what I call blue collar mentality, it'll add up over time because you're doing it day in and day out. Again, trading is not a get rich quick scheme scenario. So if you're just thinking you're coming back into trading because, the volatility is high and you're hearing all these things, it's not for you. You're better off go to a casino, but you know what? The casinos are all closed. Trading is not a casino. 4, don't try and fix Monday's losses on Tuesday. What that means, if you have a bad day on Monday, don't try and make it back in one day. Chip away at it. Okay, you chip out away it slowly, the loss goes away, you feel better, you move on. Don't try and make a loss back the next day because chances are you're breaking your rules and you're going to turn it into another loss, and then all of a sudden you're going to start doubting your system, and that's how you can get pushed out of the business. Number 5 goes with number 4. When things go wrong, get small. Meaning, if you had a few bad days, you don't size up, you size down. So this way, you're not as stressed and you chip away at losses. All of a sudden, if you're in a bad streak, what you do is you take your size down and all of a sudden just have a green day and then you'll feel a little bit better. Then if all of a sudden you have a few green days, then you're setting up a new trend and then you start sizing up again and then all of a sudden you'll be out of your slump. And we've all been in slumps as a trader. Keep even keel. That's number 6. I think that's very, very important. Don't let your highs get too high. Don't let your lows get too low. If you stay even keel, you'll be able to have longevity. Sometimes if you're all of a sudden you're trading well, you lose your discipline, you start not valuing the money, you fall asleep behind the wheel, and then you get blindsided. Same way if you're in a slump, okay, don't get too low, get small, and chip away at it and get green and get thinking clearly again. Number 7, use technicals, not news headlines as your guide. As a trader, you need to know what the market's obsessing over, but more importantly, how does the market react to it? Is it priced in? Is it expected? Is it new news? Does it matter? Don't over-focus on the headlines. Know what the headlines mean, and then know whether or not the market is having a positive or negative reaction to it. How many times, stock's gone down for 7 days and all of a sudden has bad earnings and it goes up. Like, well, it was bad earnings. Why did it go up? Well, it was oversold. It was priced in. Same way, stock goes up for months, comes out with blockbuster earnings, opens up and then goes down and falls down for 3 days. Oh, I thought it was great news or great earnings. Okay, well, it was priced in. So anyway, don't obsess over the headlines. Look at the price action. Look at the response to the headlines. 8, know your time frame. Very important. I talked to you guys how I have 5 different time frames. I have my 401k, I'm putting money in every month. I have my wife's cash account, I put 50% in. I have my son's 529 plan that I upped at 25% off highs. I started to put more in because he's 11. And then I have my active day trading account, my swing account, I have my options account and my box account. All of them are all different time frames. They need to be treated differently, and you might not have all those accounts. I've been doing this for 22 plus years. Just know your time frame and know your risk. Don't overcomplicate things. Yes, I call myself a cocktail napkin technician because I use moving averages, I use chart patterns, I use pivots. I don't have one indicator to confirm another one. All of a sudden everyone needs confirmation and then the trade's away, then you're chasing it. Keep it simple. If this happens, then do that. If that happens, then do this. Obviously it's a little bit more than that, but don't overcomplicate it. 10, focus on execution, money second. Means don't count the money. Do the right trade. If you do the right trades, the money's gonna come. Pro mindset means, I would say keep a journal. Talk to yourself. Write down things that you've done well so you could build on them, things that you've done poorly, so this way you don't do it again, and you'll create your pro mindset and your little inner voice that will tell you what to do moving forward. So you need a pro mindset in order to execute, because there's a fine line between losing a little and losing a lot, or making a little or making a lot. That pro mindset helps you make the decisions fast in the moment. Give yourself a chance, meaning you got to set yourself up for success. How do you do that? You have multiple plans. You have a well-funded account. You know your time frame. You have a routine that you like. You have to do all these things in order to put yourself in a position to win, besides probably 20 other things. Treat trading like a business. That's kind of like what we just went over. Okay, the right amount of capital, the right amount of time, and be very serious about it. Maybe put some projections and some goals of what you want to make every day, what your loss limit is, and stick to it. Be part of a community. Being isolated over the course of the last 6 weeks made me appreciate T3 Live so much more. The virtual trading floor, I have 300 traders around the country, around the world, that we talk about stocks, life, and we get to bounce ideas off of each other. The community is great. Instead of having 2 eyeballs, you have thousands. So whether it's T3 Live or any other service out there that you appreciate, there's so many good guys on Twitter, just be a part of a community. Do not trade alone. Don't fall in love with your opinions. Your opinion is only an opinion unless the market confirms it. A lot of guys in the last 7 years said, oh, the market's overvalued, I'm going to short it the whole way up. And meanwhile, they didn't stay solvent until their opinion actually got verified by the market, and then all of a sudden their opinion and their thesis triggers, and they're no longer in the game anymore. So don't have an opinion, don't get stubborn. Let the market tell you what's happening. Trade the market that's in front of you, not the one that you want. Tune out the noise. There's so much noise out there. I come in every day, I work on my note, my videos, I turn the TV off, I put my music on, I look at my charts, I look at the news, I come up with my daily plan, and I tune out the noise. How many times did people say the world was going to end when Brexit happened, or North Korea missile crisis, this, that, whatever it is? Finally, we had a sizable downturn when we broke all the moving averages. That was done in February. So the news actually coordinated with the price action, but you have to tune out the noise. Otherwise, you're going to be just news overflow. Take responsibility for every penny. What I think I meant by this is, if you have a loss limit of 1,000 or 3,000 or 5,000, okay, just value the money. So if you're down, like your loss limits, just say 2,000, you're down $1,500. Don't just say, I'm in a bad position. Let the computer stop me out at 2,000, and then you lose an extra $500. You do that, 5 times a month. That's $2,500. That's somebody's, mortgage. So value the money. So this way it adds up at the end of the year. All the money you save by valuing it could be very sizable. So don't let a bad day turn into a day you get stopped out just because you just let things slip through the cracks. Set goals for the future. That goes on every time frame, goes with trading, goes with life, goes with family, but you have to have goals. You could have short-term goals, you could have long-term goals, you have mid-term goals, and then really goals are just goals. They're not even goals unless you set a plan for action, which we go over a lot of that there. Remember that a bad day in the market is not a bad day in life. Okay, if all of a sudden you have a bad day, it doesn't mean you're a bad person. It just means you had a bad trading day. Figure out what you did wrong. Were you stubborn? Did you have multiple plans and you just messed up the wrong one? Listen, losses happen. Admit you're wrong, move on. If you had a bad day, do something that makes you happy. Doesn't make you a bad person. That's why you go to the last one, live the balanced, healthy lifestyle. Because in order to be able to execute and honor all 20 of these rules is you need your balance. You need to do things that you enjoy. You need to do things to feed the brain. You need to do things to keep you sharp. And it has to be a little bit of everything. Hopefully you have a great family that you love. Maybe you like to do fitness. Maybe you work with organizations. Lots of things you could do to live a balanced lifestyle so you could do this forever. Have a great day, guys.